Hi, my name is Georgia. I'm an account executive with Universal Commercial Capital. Today I want to help you go through some basics about fix and flip, what it is, and if you're serious about getting into the business, how you can do that. Fix and flip is a real estate investment strategy and it consists of purchasing a property in need of repairs, then you renovate it and you sell it at a higher price, and then you get your profit. Ideally, you would sell it in a short period of time, which would bring you more profit. How does it all work? If you want to be an investor, you would have to think about your steady flow of income, which means you would be engaging in a lot of frequent fix and flips so you can have a profit at the end of the day. You would be buying houses on an as-is basis at a discounted price, so you would just need to focus on purchasing the property that would bring you the most profit. The next step would naturally be the renovating process. It can go one of two ways. You could renovate it yourself, which would save you a lot of money, but at the end of the day, you would be a bit more tired. And then there's the other way where you can just hire a contractor and that can do all the work for you. After all of that, when the property is renovated and you're happy with the result, you can put it up for sale. Now, let's talk about financing. Real estate investors have a variety of options how they can fund their deals, and you can go two ways. One is to get a conventional loan from a bank, and the other is to go to a private money lender. Neither is bad or good, it just depends on what you need at the moment and what fits with your scenario. It would be good for you to expect certain expenses such as purchase price of the property, renovation and construction costs, holding costs, as well as cost of property sale. You can try to avoid the additional costs if you sell the property fast enough, which would ideally be under 12 months. There are a lot of benefits with fix and flip loans, one of which is if you're a beginner, you do not need a lot of money to start, and you can keep investing the money that you do get in your future projects. You would also need to know what ARV is, which is after repair value, and that is the final value of the property after the renovations that you do make. If you wish to know how you can calculate the ARV or the formula, you can find it in the blog post below, as well as other things that I still haven't mentioned in this video. So now that you know some of the basics, where should you start? As with anything else in life, you should do a lot of research, educate yourself, and make a strategy that works for you. That would include thinking of why you're getting into this business, how much you're willing to put in it, and what you're expecting to come out of. This is what your business plan should include: an executive summary providing an overview of your project and your company, the business opportunity your company plans on fulfilling, a detailed description of your target market, an in-depth explanation of your company's strategy to fulfill the opportunity, a marketing and a sale plan, an operations section covering how your business works, the data and the milestones of your project, a team presentation, an overview of your company's legal and organizational structure, and finally, a financial plan. So there you go. I hope I helped you a bit. Those are all the basics I wanted to go through today with you, and if you have more questions, you can find the answers in the blog post below, and if not there, I did cite some sources, and you can find the information there. This was Georgia with Universal Commercial Capital, and I hope you have a lovely day.